Hey guys, and welcome back. Today I am joined by Austin from the Altcoin Daily channel. We're going to be talking about Bitcoin. We're going to be talking about how you should allocate your portfolio during the bear market and a little bit about interest rates towards the end. Austin, how are you doing?
Awesome to be here, Crypto Jab. You were on our channel. I encourage the audience to check that out. But you provide such quality insight in the space. Happy to be here.
Oh, I appreciate that, Austin. Thank you so much for that. Really looking forward to it. Today, we are both wearing white shirts to signify the surrender of Bitcoin and crypto as it crashed. No, I'm joking. It's probably actually doing okay at the moment. Trading sideways. We're in a bit of a bull trap. I want to start off by asking you your opinion on Bitcoin. A little bit short term, a little bit over the next year. You know, we talked about on our channel how we see a bull trap coming in, maybe a rally up to 36 to 38 over the next month and a half or so. Where do you think Bitcoin is going over the next month and a half and change?
First off, long-term, fundamentally bullish. I think you always want to be increasing your Bitcoin position. And obviously in down markets, that's the best time if you believe in the asset long-term. But I too am very wary. Is this a bull trap? Only because we've had 9 solid weeks to the downside, a record for Bitcoin. And the only, that in the long term doesn't mean anything, but in the short term means we were bound to see a bounce sometime. So I am very wary. The thing is, I have not stopped accumulating Bitcoin. I am a little wary on the altcoins only because whether we grind up, sideways, or down for these next few months, I do believe in this sort of risk-off environment with tensions, geopolitically in Europe, as well as the Fed raising interest rates. I do believe people are going to cycle into a safer asset like Bitcoin, maybe ETH, but especially Bitcoin.
Well, in your answer, you just tackled like every single question I had. So I guess we can just wrap it out. I hope you guys enjoyed the shit. No, I'm just joking. As far as the bull trap, I think we would agree that there's probably a bull trap going on. Like you said, 9 weeks red in a row. First time that's ever happened in the history of Bitcoin. Hadn't happened in a very long time in the stock market. I want to say like 100 years. Whenever we do see that bull trap finish out, though, where do you think that Bitcoin will go after that bull trap concludes?
Well, obviously, a bull trap would mean that we go up for a while and eventually we go down. I think just for this year, we do need some sort of further correction, whether that's a capitulation in price or a correction in time, meaning that right now with Bitcoin in the 29, 30K range, we've been around there for months now. We haven't really seen the buyer step up, meaning that at this price, the bulls aren't ready en masse to buy this dip and send the price upwards. And again, that's because the Fed is getting more hawkish, as well as tensions overseas. So the 2 corrections that I think I need to see, and by the way, in 2 months, things could change, but right now, either a correction price, meaning after we bounce up, I think we need a capitulation event where people buy deep into it. That's often a V-shaped recovery. Maybe that goes down to 22. Maybe it touches 19 for a while, maybe 30, maybe 29 was the bottom. Nobody will know till after the fact. But if we see something like that, I will have much more confidence that, all right, the buyer stepped up. We're on our way. We're on our way forward up with Bitcoin. So it's either a correction in price or also a correction in time, meaning what if we just range around here for the next 3 months as sort of people consolidate out of alts into more higher caps? I think that show of confidence as well will be huge for sending Bitcoin, into its next legs up forward at the end of this year in 2023.
I think that's a really good point that a lot of people need to consider. Bitcoin can consolidate sideways, and that can count as the correction because what you're doing is you're giving time for the fundamental underlying intrinsic value of Bitcoin to catch up with the price. I think that's what we were doing in 2021. Actually, we were ranging sideways between 30 and 65, 69 for a year and letting the intrinsic value catch up. That's super interesting. So what would you say then is it going to take for the bulls to come in and really start that big? What's the catalyst going to be? What's the inflection point going to be to get that moving?
If nothing else, Crypto Jab, if nothing else, we have something baked in the protocol, happens every 4 years, leap year. No, it's the Bitcoin halving, which came in 2020. By the way, if you were around in 2020, I know you were. Bitcoin just kept going down. We obviously had the pandemic. The Bitcoin halving happened then. And in the moment, at that exact day, Bitcoin price was very low. It's sort of in a closed view, it might have seemed foolish to invest in Bitcoin then. But what have we been all talking about since the Bitcoin halvings before that? That means that the supply faucet of Bitcoins coming to the system gets chopped in half. And if the demand just stays the same, and by the way, year to year, we've seen demand only grow with Bitcoin for a censorship resistant fixed supply asset that you cannot print more of. But if demand just stays the same, if you cut that supply faucet in half, man, price goes up because people want to accumulate. And that's different than any other asset we've ever had in history. For example, gold, sort of the easiest to compare with Bitcoin, it has a perceived fixed supply. It's hard to mine. But if the people around the world want more gold, they can just increase gold mining production and sort of double the amount of gold coming into the network anytime they want. Mm-hmm. With Bitcoin, if you double the miners tomorrow, it has a self-adjusting mechanism where you will only get a certain amount of Bitcoin around every 10 minutes when the block reward happens, and that cannot be changed. So catalyst we need. I think the easiest one would be that the Bitcoin halving. Other stuff, I don't think it's going to happen this year, but say 2 years down the line, the Fed prints more money. Obviously, a huge catalyst. It's going to make, having something that is undebasable, only 21 million. It's going to make the value of that huge. So those two things I would say is the biggest catalysts.
Well, that's really exciting, because that means that we're going to, one, potentially have very low places to buy in Bitcoin for another year. That means that we would be able to accumulate Bitcoin. But the thing is, we're almost certainly going to see both of those things happen. We know that the halving is going to happen. And we also are very confident that the Fed's going to come out and print more money. They're not going to learn their lesson, I don't think. There is going to be more money printing, you'd say, right?
I mean, it gets easier. It happens faster and faster every time. For example, the 08 crisis, it took maybe, I forget exactly, but maybe 6 months, 12 months after to get that stimulus, print a bunch of money, bail people out. For the pandemic crash, man, it happened the next day. It seems like it's only getting easier for them to devalue the currency, and there's no signs of them stopping.
Yeah, and the sad thing is, every time in human history that you've ever done that, the civilization has collapsed within 200 years of it starting. Ask the Romans how that went for them when they started clipping their coins. Ask us how it happened, how it went for us here in 200 years. Probably much less time than that. Let me ask you something about the Federal Reserve and the interest rates, actually. Do you think that the interest rates going up, because Jerome Powell has talked about a lot of interest rate hikes. I've talked that we could see, right now we see 1% federal funds rate as far as the base rate. That could be 5% by the end of the year, 3, 4, 5% by the end of the year. Do you think that that's going to do what it takes to stop inflation in its tracks, or are we just going to keep seeing inflation move?
Eventually, if they go high enough, I think it will stop inflation in its tracks. The easiest comparison that's most like what we're going through right now, sort of a stagflation, is back in the 70s, where inflation kept going up. And man, those interest rates went way higher than where they are now.
Yeah.
I think minimum, based on how the Fed's speaking today, we're at least going to 2%, and then sort of a reevaluation from there. But let's remind the public, Jeb, that back in 2017, they raised interest rates 3 different times in succession. And what happened to Bitcoin in 2017?
It's doing very well for itself. It went up 2,000%.
Exactly. It went from around $2,000 to almost $20,000. Now, eventually they kept raising interest rates, and that does provide a gravity to the market. So even the most, even the best assets are going to be affected if you raise them high enough. But that just has short-term indicators. I think the value of BTC, obviously, is the long-term revolution.
Absolutely. As I've said many times, I think Bitcoin is the biggest solution to one of the biggest problems that we face financially, and that is the debasement of our currencies. Well, let me ask you one more question, because I've seen a trend on CoinMarketCap over the last month. We've seen Bitcoin dominance jump from 41% to 46% right now. We've seen Ethereum dominance drop from, I want to say, around 19% to about 17%. We saw Cardano drop from 1.6% to 1.3%. And we've seen the market dominance of the stable coins go up in that same time. It seems to me that a lot of people are taking money out of the altcoins and putting it in US dollars or equivalents, such as stable coins, and Bitcoin. Why do you think they're doing that? And do you think that we should be doing that?
I think they're doing that because this is a risk-off environment for many factors, meaning investors don't want to be in the risky assets. They want to consolidate stock market-wise into the Berkshire Hathaways, into the gold, the safer plays that don't have the revolutionary gains or aren't doing that much different, but that's what they want in these risk-off environments. With Bitcoin specifically, I can never tell the audience what they should do. I wish I could see the future, but what I'm doing is I have been cycling more of my portfolio into Bitcoin and into ETH specifically. And I think actually Benjamin Cowan did a really good video called the Altcoin Reckoning. it goes over the data of a lot of stuff that we've been talking about on our channel for a while, in terms of Bitcoin dominance. And even though altcoins have drained some 50, some up to 80%, Bitcoin dominance has only gone up from around maybe 36, 35, whatever that was, now to under 42. And if we look back, Bitcoin dominance last cycle in the bear market went up to 70. And I'm not suggesting it's going to get there again. I think we're seeing diminishing returns on Bitcoin dominance as well. One, because we have way more altcoins in the ecosystem every year, and two, a better quality of altcoins. They're obviously sticking around longer. But I mean, I think that Bitcoin dominance is going to get, at least to 50, probably 55 at a minimum. And even like I began the interview with, maybe this isn't a bull trap. Maybe 29K was the bottom. We only go up from here. Even if we do, I still think, based on the tensions across the country and the unknown from the Fed, all that stuff, I still think people aren't going to be the new money, because right now retail is gone. There is no retail watching our videos. It's the old dogs, the people that were here a year, 2 years ago and more, that want to learn, that want to prepare for the next bull market. But it's not going to be next month. Even if Bitcoin goes back to 50K, it's not going to be next month that we get all this new retail that's going to jump in. It's going to be Bitcoin first, the institutional money. And then as more time passes, that's when people will start, okay, the environment's changed. I'll delve more into those altcoins.
There you go. Well, let me ask you, what are some of your final thoughts here before we wrap it out, Austin? I know that we've covered a lot in this video and there's a lot to break down in the cryptocurrency space. How would you put all of this into a bow for us?
I would say that in the bull markets, you'll make money. In the bear markets, you'll make generational wealth if you obviously bet on the assets that, one, you believe in, and two, will stick around 10, 20 years from now. The bear markets are when you want to learn, when you want to grow, when you want to increase your crypto positions. You make your own decisions. I am heavily focusing on Bitcoin and ETH, especially in the first half of 2022. But now's the time to learn and see what happens.
Absolutely. Well, Austin, thank you so very much for coming on. Guys, make sure to check out the Altcoin Daily channel and all their social media. Those links will be down below. Austin, thank you so very much for coming on, buddy.
I would encourage the Altcoin Daily audience to subscribe to Crypto Jeb. There's obviously a link down below. Give it a shot. Thanks, man.
Thank you so much. Appreciate that. Peace, guys.
If you enjoyed this video, make sure you hit that like and subscribe button. Also, comment down below so we can continue to give you the best videos possible. Peace.